Good morning, folks, and welcome to the pre-market insight for January 3rd, 2019. Geez, we started the year with a bang yesterday, and now we're getting even more into the volatile moves. Let's get into it right away. I was thinking yesterday evening that my morning talk today would be about this epic move that we had yesterday evening, essentially on the first trading day of the year. We broke to new highs off of this nice push into that 32 round number, 3260 number that we spoke about yesterday morning. In fact, we made an additional high at 3263. However, this is why I always advocate when things seem to be calm, they seem to be peaceful, they seem to be just simply grinding in one direction, and it is cheap to purchase portfolio insurance. I always advocate to friends, foes, and clients alike purchase portfolio insurance. Buy puts. Protect your portfolio because we live in a world that is driven by political headlines, that is driven by all sorts of things happening overnight that is outside of your control, that is always prudent to have some insurance to ensure that your assets are protected. Now, to be fair, in the overall scheme of things, we have not even broken to lower levels that we are looking at this 3200 level that was the start of this intermediate range move. And so, whilst we may be opening down just about close to 1 percentage point, um, there's no need yet for wholesale panic, but we need to see how this session plays out later on today. As you can see, we broke down to a low of 3206 within sniffing distance of the 3203 top of the range previously made. And so, what this tells us is that, of course, there's institutional buying and demand that has come in here that has caused price to bounce approximately 24 points. Let us see if that demand shows up within the regular trading hours as well. So, to the upside, what do we have to look for? Clearly, we have this um, prior range of prior resistance, which was broken yesterday at 32.34. So let's see how that first level 32.34 responds during the regular market hours. If we do break through 32.34, perhaps consolidate. You can see a bit more of consolidation, a grind higher possibly to 32.45. But I would expect, especially today being a Friday, for the upside to possibly be limited. People will now begin to think, you know what, I should probably start to sell a bit of my longs, start to trim some of my exposure, given the fact that we had very negative headlines coming out last night about there being a strike on one of the top political figures in Iran, which of course will create uncertainty as to what will Iran's response be. And if it's one thing the market does not abide by, it is uncertainty. So in the short term, we can see that we found buyers here at a former strong price level, but there's no telling what is going to happen as people begin to get more nervous, and as they understand just how uncertain this particular time is. And so I would expect there to be some cap on the upside in the short term. So definitely I'll be looking to be selling short call spreads on some of the leading names that have now probably uh, come up into testing their former highs. Let's see how they respond there to begin putting on some short calls. Be safe out there today, guys. Keep it simple, smarty.